Let's take a look at the currencies as well. That jobs number, the loss of 467,000 jobs in the month of June, much higher than expected, weighing on equities, but sending some investors for the safety of the dollar. You can see dollar strength here against the euro and the pound, though you do see a little dollar weakness there against the yen. Now, to talk about that, Vassilli Serebriakov is here. He joins us to discuss his outlook for the dollar and the impact of the unemployment numbers. And we were just talking about this. Let me just say you're a currency strategist at Wells Fargo. And let me get your take, first of all, on the impact of the jobs number. You say it's really nothing unexpected when you get a horrible number like this.
Sure. We think the dollar is basically displaying its safe haven credentials once again. The number was negative for risk appetites. Equity markets went lower. The dollar went higher. This is pretty consistent with the way the foreign exchange markets have been trading over the recent months.
You do see, though, a little bit of dollar weakness against the yen.
This is also consistent. The yen has lost some of its safe haven support, but not completely. And again, the lower equity markets would certainly be in line with the rise in the yen.
Let's talk just for a second about the safe haven status of the dollar. I mean, it's been debated whether it's there or whether it's maybe losing some of its luster. It seems like, though, anytime there's a little bit of concern, anytime the VIX spikes up and equities drop, people do run for the safety of the dollar.
Yes, I mean, despite the conflicting messages that we're getting from China, the truth of the matter is that according to the data, global central banks are still buying U.S. treasuries. And in fact, they're buying them, more of them than they were buying last year.
At a record pace.
At a record pace. We really don't see the U.S. dollar's status as a reserve currency threatened anytime soon.
It is, though, a lot of fun to talk about the possibility of some artificial new world trade currency. That's what China asked for before they sort of did an about-face a week later. Is there any likelihood that this kind of thing would happen? Is it more of a sort of Harry Potter kind of idea?
It sure is a little far-fetched. Now, that said, we do see an increased international role for certain currencies, such as the Chinese renminbi or the Brazilian real, in terms of their role in international trade or perhaps finance. But that is still very far from a reserve currency status that implies a very large and liquid domestic financial market, for example, and only the U.S. really qualifies.
I wonder what would happen if China did get a new world trade currency. I mean, would they have to unpeg themselves from the dollar? It would probably be a very convoluted process.
They certainly would. They certainly would have to change their capital account policies, certainly would have to change their flexibility of their foreign exchange, and we have really seen very few signals that that's what they're intending to do. That's why we do think that this talk of new reserve currency is overdone at this point.
Nonetheless, it does seem interesting that you still see so much relative dollar strength with the amount of debt that the U.S. is selling. You know, people always talk. I have David Tice on the show later. He's concerned about the Fed just printing money, and obviously a lot of viewers are concerned about that as well. Does it seem an anomaly to you that we continue to hold such strength in the dollar even as we, gear up the printing presses here?
We're not in a very enviable situation here in the U.S., and of course the latest job numbers just support that. That said, in relative terms, we think the U.S. economy can still be one of the earliest, if not particularly, but still be ahead of some of those other economies, for example, the Eurozone and Japan, in emerging out of the recession. That should help the dollar.
What do you think about the dollar-euro trade over, say, the next year?
We certainly think that whenever you see the euro against the dollar over 140, that would be a sell for us. We see a gradual decline in that pair to perhaps 130 towards the end of the year and to 120 next year.
Let me quickly ask you about emerging market currencies, because obviously it's been a hot topic lately with the run-up we saw in emerging market equities. Do you expect strength there throughout the year?
Selective strength. Looking at some of the historical relationship, of course, a lot of emerging market currencies are very pro-cyclical. They would do well when the global economy recovers. We would look at currencies such as the Brazilian real and the Indian rupee. We think those currencies have very strong fundamentals, and they would be supportive of currency strength going forward.
All right, Vassilli, thanks for joining us. Vassilli Serebriakov there, currency strategist at Wells Fargo.